Welcome to a new Edgewonk trading journal review, and we have a special and very interesting journal waiting for us today. So hello, welcome back, and thank you for everyone who sent in their journal. By the way, in the video description below there is a link to our free review service so you can submit your journal, and we will do a similar video and try to find out how you could use Edgewonk to improve your trading. So let's get into this. We can see at first glance the trader here was in a nice positive environment, almost a 5% gain, and then something happened here, and over the past roughly 80 trades he completely lost all his previous gains, and now he's in negative. Negative 2% is his current performance. And let's take a look and find out what went wrong and maybe even how to improve this one. So usually what I like to do is go down here and look at the overall evaluations to just get a first idea of where the trader is right now. So it's a 45% win rate, which is not too bad. There are many systems that can be traded very profitably. We have seen it in the past with a 45% win rate, so this is not a big issue. One thing that really stands out here is that the average reward to risk ratio planned, so the reward to risk ratio when the trader enters his trade is seems to be very small, only 0.74. So this is usually not a great outlook for a trade. If you start with a small reward to risk ratio, things usually happen during the duration of your trade, and then the realized is usually much lower. So this is already something that the trader should or could look into, and to see if there's a way to improve take profit placement. Also, another thing that really stands out is that the average winner is just slightly bigger than the average losing trade. Also something that is usually not great. Usually you want to have your winners be much bigger than your losers, and this is something that we can keep in mind. So now the next step, we can go to the journal and just look at, in the first column, when we scroll to the left, or in the second column, I want to take a look at the tilt meter and to see how is the trader performing. And the tilt meter gives you an idea of how well the trader respected the rules, how disciplined he was, or if he broke the rules. So a green tilt meter shows that the trader respected the rules, that he took the trades according to his plan, and a red tilt meter shows that he didn't do that and he maybe broke his rules, or he took trades that are not in his trading plan. And you can see that there are streaks of very deep red tilt meter readings and bars. So this is something that you should really look into, and we will do that. Here again, a very long streak of a red tilt meter. We have positive tilt meters, and again a streak of red, and this is usually not good. So you can see in the beginning it seems like the trader was doing quite well, mostly green, and we saw that in the rising equity graph. So we need to address this on a deeper level to see why did the trader broke his rules, and how is it really impacting the performance. So we can take a quick look at the chart lab, and then we want to take a look at the equity graph, which is just the general performance. And we can see now that in the beginning it was quite smooth, and then something happened here where the trader really broke down, and suddenly you have very strong and very quick downward moves. So it means that losing streaks with quite big losses. You can see over a short period of time the trader gave up what he previously made over a much longer period. Then a quick recovery, and then again a big drawdown, a quick recovery, big drawdown. And this is something that we really need to look into. And the best way to do that is with the trade analytics, and this is really where Edgewonk is just unbeatable for a trading journal. It's a pivot table basically, but you can tag your trades in Edgewonk. If you don't know what this means, let me show you. So here's the pop-up for your trades, and under advanced trade data you have different custom statistics. For example, the trader in this case, he used custom statistics for the different time frames. So it seems like he's trading the 4 hour, the 1 hour, the 30 minute, the daily, and the 2 hour. He's having a custom statistic for trend. He's taking the trade against the trend, with the trend, or within a range. The type of entry, limit order, market order, or a stop order. Patterns, here different patterns that the trader is tagging on his trades. Conditions, excited, depressed, tired, lack of sleep, pumped. Statistics about stops and take profits, pips and profit. And then here you have your trade comments. You can assign a comment that describes the trade entry according to the plan, too early, FOMO, too late, impulsive. Comments that describe the exit and also the management. And then in the trade analytics, you can really observe them and see how it impacts your performance. So let's actually do that, and let's take a look at, let's start with the trade entry comment. So we add this here to the trade ordering criteria, and now you get a breakdown of the trader performance. So here you can see the different comments, and what you really want to look for are big outliers. So for example, what you can do is look at the sum of the gain, and then you can order it, and you can already see that when you order it, impulsive. So it seems like out of 122 trades, he took 90 trades that are according to the plan, which is great, but he took 23 trades that are impulsive entries. And you can see when we look at the sum of the gain, he lost $99 for those trades. And on all the good trades, according to the plan, they're 90. It's more than four times actually, the amount of trades. He only made 110 trades. So he lost almost the exact same amount on 23 trades that he made on 110 trades. So this is a huge outlier. You don't need to worry too much about the other ones. Right now, they are obviously too early in FOMO. That's not a good one because it already amounts to 57. But you should focus on the big things at hand and also narrow it down to as little as things that you can find, because it allows you to work more targetedly. So impulsive entries, clearly something that if the trader would have avoided those, his performance would have already been profitable here with the trades in this journal. Let's take those off, and let's take a look at the trade management comments. So we add them, and now we have a breakdown here of the trade management comments. Again, you can sort them, and you can see here there are two things that really stand out. So he lost over $500 on both of those comments, and there are only 36 trades. So again, only a quarter of all your trades, but he lost $500. If he would have just avoided those trades, his performance would have been significantly positive. So really, really interesting to see. And those are really the things that the trader needs to focus on. We will dig a little bit deeper later. We can also look at time frames, for example, since he tagged time frames. And yeah, one thing that really stands out here, again, half of his trades are on the 1 hour, but again, he lost $130 on all of those 1 hour trades. So maybe it's good to think about if it's really advisable to trade 1 hour for him, because clearly it seems like this is not working out for him. Maybe it's too low of a time frame and emotions are too big of a deal for him. What else? We could look at type of entry, and what can we see? Yeah, here clearly again a huge outlier. Limit order, 80%, 80 trades out of 122 trades were taken with a limit order, and he lost $200. Again, just avoiding limit orders would have made him a profitable trader in this sample size. So great findings, and again it shows why Edgewonk and why the custom statistics, why tagging your trades is so powerful. There are many trade journals out there where everything is automated, and that is great, but the real power of a journal only comes to, you can only see the real power once you really tag your trades, once you individualize and personalize your trading journal. It does take a little bit of time, obviously, to go into every trade and tag it, but you can clearly see the value. You wouldn't have otherwise seen those things if you wouldn't have tagged the trades. So let's maybe take a look at one last thing, maybe at the trade setups, the different setups that he trades. Let's order it again. And now you can see there are two setups break support and pull back, bounce from OB. He only took 11 trades for those two, but he lost quite a lot of money. Also, when you look at the expectancy, those are really big losing trades. And it could have been also the case that, remember when we looked at the equity graph, I highlighted the fact that the downtrends and the losing streaks are quite pronounced. So this could also be an issue here, and one of the reasons why it is the way it is. So clearly there are a few things the trader could change, avoiding trades on the 1 hour time frame, not taking limit orders, maybe overthinking or working on those types of setups as well. And this would make the trader already quite profitable. So let's take a look at the chartlet actually. And what we can do now is let's examine the performance without the things that we identified. So I will now select all the setups except for bounce from OB and the break, support and pullback setup. So let me do that. So now I have selected all the setups, you can see, except for the two that have the big outliers. And you can see there are still those periods where the trader lost quite a lot of money, but overall he would have been profitable. You can see a performance of 4.07%. Compare that to the negative 2% in the beginning that we identified. And that's a huge difference. You go from losing to winning right away. Let's take a look at the entry comments and let's select everything, even the negative ones, except for impulsive entries. So even the trades he took too early and too late, we selected them, and you can see now we are at a 4.5. And yeah, still here we have a big drawdown, but overall, especially in the later part, it looks much better for the trader. Let's take maybe a last one. Of course, we don't want to overfit it, but we just want to see how the performance could have looked like. So what we want to do here is not in plan. We want to include everything except for the trades where he said they were not in the trading plan. And now you can see those are all selected. Okay. Now you can see almost at a 7% performance. Again, -2, that's where we started. The downtrend here still is, it's visible, so the trader would need to look into what happened here. But overall, this looks much better, obviously. And the trader, when he messaged me, he was a little bit, disappointed in himself, I think, and unsure what to do. But looking into the trading journal this way, it immediately shows that the trader is not completely doing everything wrong. There are components in his trading system that are working quite well. So just focusing on those things could make a huge difference. Let's take a look at the simulator. And this is the simulator, by the way, without just looking at everything in his trading journal. Everything based on the 2% loss. This is how the future for the trader could have looked like, based on 20 simulations over 500 trades. So yeah, it's a very erratic. You don't want to have that, because there's a good chance you will end up negative, and it's more chance or more luck that you end up with the profits. What you want to see, let's start a new simulation based on what we have selected now. And you can see now all of those graphs, all of those 20 simulations are positive. So the trader, just making those 3 adjustments, obviously it's not just, because working on your emotions can be quite challenging, but you can see no matter how often we start the simulation, the future always looks positive for that trader. So this can be a huge revelation for the trader, and it's a huge eye-opener. And the trader, he hasn't locked the trade for a few months because he said he wasn't confident in himself, but this already can give him a lot of confidence, and it should give him a lot of confidence, because there are parts in his trading system that are clearly working out, and those are the things that you need to work on and you need to focus on. You could improve the things that are not working out, or you could just try to avoid those things and focus on the things that are working out. And you're looking at a much healthier equity graph and a positive outlook to the future.